everybody in the PTG room. I am going to take down the charts here and get myself set up in the workshop room. Okay, so I'm going to be
The
broadcasting
US Environmental Protection
audio
Agency
and
says they've
visual
paused work on the
in the workshop
biofuels deal.
room. So be
Says they're
sure
awaiting further guidance from
everybody
the White
is
House. That's according to
listening in
sources being quoted by Reuters.
and in the workshop room as well as your charts. Okay? So I'm going to take down the charts here in the PTG room right now so I can in the workshop room as well as your charts. Okay? So I'm going to take down the charts here in the PTG room right now so I can. We're in the workshop room shortly in a few minutes. We're in the workshop room shortly in a few minutes.
Brexit news and a note here from JP Morgan. They've revised up the probability. Revised down the probability of a no-deal Brexit to 10% from 25%. They've revised up the probability. Revised down the probability of a no-deal Brexit to 10% from 25%. Some more here from JP Morgan. Says the probability of an extension has risen to 85%. That's up from 60% prior. Some more here from JP Morgan. Says the probability of an extension has risen to 85%. That's up from 60% prior. The UK Business Minister Leadsom says the online retail giants need to pay fair taxes. The UK Business Minister Leadsom says the online retail giants need to pay fair taxes.
All right. Good afternoon. Good afternoon. Good morning, everyone. Again. All right. Is
Fixed
everybody
income news,
in
US
the
Treasury
workshop
announced
rooms?
there to
Everybody
sell
see the
$40 billion worth of
uh,
8-week bills and
PowerPoint?
$45 billion in
And
4-week
everybody hear
bills.
me okay?
Auctions to take place later this week.
Good morning, everyone. Again. All right. Is everybody in the workshop rooms? Tom, you're in. Okay. How about everybody else? Just want to get a show of hands, make sure everybody is where they should be and everybody can hear properly. Okay, Tom, you're in. Okay, Stephen. Okay, great. All right, terrific. All right, so then we're doing everything correctly. Where they should be and everybody can hear properly. All right, President Audio. Okay, thanks, Mike. All right, great. All right. Okay, let's just, I'll just get right into it. Again, make sure, we have, everybody is set for their schedule. All right, this will be recorded, by the way, so we'll get going right here. Again, it'll just be a very short presentation here, and then we'll get right to the charts. We'll talk about what we look for. All right. All right. Again, we're getting pretty good at this, I think, overall. All right. Let me start the recording, and we'll get right into it. All right. Again, we're getting pretty good at this, I think, overall. All right. Let me start the recording, and we'll get right into it. All right. Good morning, everyone, and welcome to the Mr. Top Step Symposium this week. It's great to have you with us. We're kicking it off this week as a first presenter, and again, want to welcome everybody to the PTG trading room here. We do have a number of repeat visitors as well as quite a number of few folks. So again, welcome to everyone. Before we get started into the overall overview of Polaris and what we do here, of course, need to make sure that we give you the NFA disclaimers. You've all seen this before, basically that past performance is not indicative of future results, and the presentation here and on a daily basis in our trading room is for educational purposes only. Okay, I am not anybody's specific advisor in the educational arena, but again, we do try to guide everybody on an educational basis and kind of help to reduce risk and increase our potential for profits. Of course, the NFA compliance rule 2-29C simply states hypothetical performance results have many inherent limitations, and you can read the rest of that. Okay, and trading in futures and options is speculative in nature and involves substantial risk of loss. Okay, so we got that out of the way. Again, we're all familiar with those disclaimers to satisfy the regulators. Let me give you a little bit of background of myself for those that are unfamiliar with who I am and my background. I've been trading for over 36 years now. Doesn't seem that long, but definitely 36 years. I've worked for various investment banks and hedge funds, those including the old Shearson Lehman Brothers, way back when, United Bank of Switzerland, and a number of different high-frequency style hedge funds over the years. I am a registered commodity trading advisor. All right, so I do have to follow all the regulations required by law. During my time at the investment banks, I was a market maker enlisted in NASDAQ stocks specifically. I also traded index futures and derivatives, various structured products and so forth as hedging. So my primary dealing with futures was more from a hedging perspective rather than a speculative independent trader. Again, as a market maker, I carried various type positions, and we're always at market risk there. So using futures and various derivative products helped mitigate that risk. All right. Of course, portfolio risk management is all part of that. And you see my beautiful mug there in the bottom right-hand corner. So that's a little bit of background on my history. All right, what I'd like to do is just briefly give you everyone an overview of what we try to accomplish here, at Polaris Trading Group. Of course, we're all trying to make money. All right, we're all trying to increase our account sizes and so forth. But that's not the core of my mission. All right, that's an outcropping of successful trading. But really, what I have found over my years in dealing with developing and struggling traders, okay, is that a lot of
The
folks
Italian Treasury says the planned
have
auction
poor
of a
decision-making skills.
BTPEI bond could be
Right.
cancelled or scheduled for
So what we
October
want to try to do,
25th.
my four-pronged mission is pretty straightforward. I want to
Italy's
help
also mandated
everyone
banks for a
improve
new
their
inflation-linked
decision-making
10-year
skills. There are a
BTP.
variety of subsets to that that we use, and between our indicators and how we approach the decision process. But we want to improve your decision-making skills. You improve those skills, you increase your odds, right? Again, we're looking for an edge. So we want to increase your odds and edge, however slight that may be, all right, to succeed at this endeavor. I want to help you learn new empowering trading habits. Again, I cannot tell you how many bad habits people have, all right, and it seems as though they reinforce their bad habits. Counter trend trading is absolutely one of the bad and probably one of the worst habits, all right, out there. If they have some success, it and just happens to be more luck than a skill, and that's reinforcing a bad habit. So, and it's okay to enter a trade at a key significant point, but I'm talking in terms of, really just kind of scaling in, scaling out. And if you don't have deep pockets, if that's not your bailiwick, again, the best thing to do is to stay in alignment with the dominant force. So that's one of the bad habits that people have. So I want to help empower and change the trading habits that most folks have. Demystify market action. This is kind of a broad category, but again, there's a lot of people that just are somewhat in the dark about why certain things happen, or what's the nature of how markets move. Okay, and again, we try to cover a lot of those things in the process of what we do on a daily basis and in the educational material that we have. All right, and again, it's a broad subject, so what I kind of think about is pulling down the veil, all right, and demystify, as I state here, what the price action is all about. Okay, and then ultimately we want to become a more informed trader. So this category is, people talk about, there's professional traders and retail traders out there, and of course that is true, but I want to refer to them more as the informed group and the uninformed group. So I want everybody here, in our membership and traders out there, to become more informed. The more you're informed, that doesn't mean you need to know what's going to happen. Nobody does, but the more you're informed, again, this kind of circular motion here on the mission is, the more you're informed, the better decision-making skills, decision-making skills. You'll improve your trading habits as you learn about the market's, auction process. Okay, and what others out there, look to do, and what you're seeking to accomplish. Again, the veil comes down, you demystify action. So that's my four-pronged mission statement, all right, for everyone. And again, if you notice there is not anything about being a profitable trader, because being a profitable trader is an outcome, right? It's not the process. I focus on process-oriented goals. Okay, so again, in these broad four categories, there's quite a number of subsets to them, and again, that's where we focus on. So once we're able to get better at these areas, and again, with no guarantee of profit at the end of the day, but we do increase our potential for profits. And again, that's what we want to do. We want to be able to put ourselves in that position. All right. So that's my four-pronged approach my mission statement. And with that, this is just a short, brief introduction of what we're about here. And then what we'll do here next is we'll go right directly to the charts, and I'll give you an overview of the various things we look at and we look for, all right, without getting into too much detail, and give you kind of an overview. All right, so let's get to that, the charts next. Okay, so everybody should see the opening range combination. So there's a couple different views that I show everybody in the room. The core view, let me just bring that into view here for a moment. Okay, this is the core view that I show everybody in the room on a daily basis. Now, there's a lot of information on this chart. All right, so what I thought I would do is I would split it up. I would break it down. The three main contracts we look at are the ES, NQ, and CL, crude oil. I'm going to separate these to make it a little bit more, just a lot easier for us to view from a perspective of kind of individual contracts. Okay, this particular, just to start off here, this particular, what we call a Scandalized Dashboard. What this is a piece of software that we created, and this outlines all the categories of trade setups that we look for. All right, so we look for an ATR style trade setup. Again, these are categories of trade setups that we look for. Of course, right here where it says the trend, what the immediate trend is, up, down, on the bar type. All right, so you'll see the bar type, 3 minutes, 500 tick, 10 Renko, whatever that bar type is. All right, we're looking for what the immediate trend is on that. It's not necessarily the trend of the big trend of the day or daily or weeklies, but it's on that specific bar type. Okay, and then in which case, then we want to know what the ATR, we call it ATR stop, but it's really an ATR structure line. We'll show that shortly. And then the categories of trade setups that we have are called stackers, bull and bear stackers, XMO, bull and bear. XMO stands for a cross of momentum. We'll outline what those are. And then we use a CCI crossover system that I have created. And we have what we call a turbo premium or a discount. A premium is a short sell. A discount is a long purchase. And then we have the last category are extremes. Okay, when prices reach certain extremes, it'll flash a signal, give us an opportunity to either exit. Primarily, we'd like to exit at extremes if they're there, but extremes can also be a reversal point. All right, that's a little bit more advanced, but we like to actually use extremes for exits first rather than entry points. All right, so you'll see this throughout the course of your visit with us and on a daily basis. The Scandalized Dashboard. Okay, let me just move that out of the way for the time being, and we'll give you an idea. So every morning, all right, everything actually starts with the daily trade strategy. Okay, so if we go on the website here, okay, and we go into the blog section, and we click on daily trade strategy. So the daily trade strategy is our beginning outline for every day. And then the blog is really just an archive of each of the daily trade strategies. All right, so let me just briefly show you that. And as we drill down into, and by the way, everybody has access to this daily trade strategy through the link and the password available on the PTG chat board. But we just basically have a brief outline of the market's economic calendar, And then really the meat of it is I outline the S&P and the NQ. NQ's below here. Okay, and then it's a pretty standardized format. And what I'm looking for is we follow what we call it the Taylor 3-day cycle. Now, we have some past workshops, boot camps that I've gone into some very deep detail about the 3-day cycle. It is also available on the website here. If you go onto the trading tab and you drill down, and it gives PTG 3-day cycle. All right, so you can. There's a whole separate page, subpage for that. That we talked about the 3-day cycle. But in terms of the daily trade strategy, this is our starting point for the session. And we look for we have a bullish and bearish scenario 1, scenario 2. All right, bullish, bearish, and we outline target zones. Okay, so for instance, today's target zone, one of our target zones was up at 29.95. I think the high of the day was 29.94.50, so pretty much hit it. The lower target zone here we had was 29.75.70, okay, which certainly has gotten fulfilled there. These are the initial target zones. And then down here you'll see high of day, low of day range projections, okay, and you'll see a number of other levels and targets, etc. So these are all part of what we're expecting potentially for the session again. And then we just offer you a quick snapshot first thing in the morning of what the broader ranges are. Same thing for the NAS. Okay, so everybody has access to that at the beginning of the session, all right, as we begin. So the first category of trades setups we look for is our opening range, all right, the opening range strategy. And that is, we do that in both crude oil, S&P, and the NQ. Okay. Again, we have actually an entire video on that. I think we did that as well. All right, for one of our webinars that again I can give a link to for everybody this week. But essentially, the opening ranges we look for a burst of whether typically every day either the gap is up to the downside, and we look for an extension of the opening range. It's a very time of the day, very early, right on the opening, the RTH opening, that we're looking for an extension of kind of a momentum move, okay, through that. And we have specific targets, entry techniques, and so forth. And again, we do this live every morning. All right, and we had a successful trade in the NQ this morning, as you can see here. And again, these are all posted, fully transparent, on our website under the performance area. Over here on the left-hand side, crude oil, we struggled a little bit. That's been not as fruitful these past few weeks as it has been over the summer period. Okay, but again, everything is outlined for us. All right, so that's, and these are all on a 3-minute basis. So that's our first trade of the day. That kind of kicks off the day. It's starting at 9 o'clock Eastern time, and then we run into the 9:30 opening for the RTH session on the indexes, and then we just take it from there. Now, in terms of other things that we look for, okay, so let's kind of show you here, particularly in the ES. So you'll see at the top here we have, and these are the by the way, these are the workspaces that I send out to all our members that have the software. Okay, we all use the exact same workspaces. These are all pre-templated, everything for us. Okay, so everybody is working off the same information. Whether you're using, this is Sierra chart that we use. Okay, we also have all our indicators available for the Ninja 8, Ninja 7, Ninja 8 platforms. Okay, if some of you are using that platform, all our software tools are available for there as well. So let me just kind of walk you through. This is a little bit cleaner view all right, and some of the things that we look for, all right, and this is going to apply. We're going to look at S&P here for a moment, but this is going to apply to the NQ, all right, in the exact same fashion, and the exact same fashion with the crude oil. So as you can see here, as I'm tabbing just back and forth through, okay, everything is pretty standardized. Okay, we got order flow on the far right, we got the larger time frames on the left, and then in the middle is essentially our execution chart that we look for. And again, that's where we spend perhaps most of our attention anyways. So we want to make sure that we're focusing there. And again, we use order flow to help in our final decision making, all right, on a particular signal. All right, and again, many of you are familiar with order flow and how to use it. Some people use that. There are other various types of order flow displays. All right, but we use pretty much a straight delta delta imbalance type chart. Very familiar with for everybody. All right, so let's go over to the ES, and let me just kind of show you here, all right, where we start off and how we drill down. Again, this is going to be the exact same process, whether it's for NQ, crude oil, it doesn't really matter. So we just kind of always want to have an overview of the weekly picture, right? What the weekly high lows are, etc. Right? Just use that as a starting point. And then we'll drill down into the daily. This is, again, I'm looking at the far left here. And by the way, you guys can zoom in your charts a little bit if you need to. You can use your scroll mouse if the display is a little bit small. Make sure you use your scroll mouse and you can zoom in on what I'm looking at. So again, the idea is look at the dailies. All right, start off kind of what the patterns are there. These squiggly lines down on the left are various ATR values, right? So I look at a 3-day, a 5-day, a 10-day, and a 20-day average true range. The one that's highlighted here to the third one down is a 10-day average true range, and that's the one we typically use, which is a normalized 2-week period. The next chart here that we focus on, all right, again, more from overview, all right, is a profile chart. Everybody should be fairly familiar with profiles. If you're not, there's plenty of information out there. I am not necessarily a profile educator, all right, but we do reference that quite a bit. And again, we do have some resources on our website to learn about market profile, volume profile type analysis. So there's plenty of information and education we have regarding that. But once that's out of the way, we start drilling into some of the bigger, let me just stretch this out a little bit. This is our 60-minute chart. Now, there's a lot of lines on here, but let me just kind of outline it for you. Okay, 60-minute chart. You'll see here what's called HOD ATR. That's the high of day average true range projection. So we use a 10-day average true range, and we project the 10-day average high and the 10-day range low, okay, based upon the highest high of the session, right, or the lowest low of the session. And this is a dynamic indicator. So as the prices continue to spread out, okay, the projections will, again, all stay in accordance with the 10-day average, the current 10-day average, but will paint automatically on our charts, okay? And again, and you'll see here in terms of the profiles, all right, we have a 5-day rolling profile. That's the large, thick one to the right. So it's a 5-day profile. And then we have the individual session profile. So we always know what's happening relative to the 5-day rolling profile. Again, value highs, value lows, 2 standard deviations, 3 standard deviations. Again, everybody should be somewhat familiar with that. All right, so again, we want to outline what those are. And then also we have, let me just adjust these for a second. Let me take off the ATRs. So I talked about we use the 3-day cycle, and again, we've done a prior presentation on that, and I will provide links for that after the end of this presentation in our trading room. But the 3-day cycle is so we're on a cycle day one. Cycle day one is the beginning of a cycle, and we're looking for the normal for a cycle day one is a decline. All right, and as you can see here, we, courtesy of the ISM number today, report. Price was, prior to that, price was trading at the upper edge of the 5-day profile. It looked as though it wanted to maybe even break out to higher ground. ISM put the damper on that, put the kibosh on that, and again, as you can see here, we got a pretty solid move to the downside. All right, and so now you can see we're trading now down near these prior key pivot levels, low edge of the 5-day profile. So the anticipation there, we'll expect some sort of a buy response perhaps coming in. But you'll see these other levels here where it says PTG, TTT. Now this is all related to the 3-day cycle. All right, so these are projections, all right, for downside and upside. So you can see up here, okay, there's a possible high projection. Again, that's up there around the 95s in this zone. And then down here we have some levels, some projection levels. Again, these are all painted on our charts in advance for those that have the subscription to the 3-day cycle. So this is where we start our day. Again, tops down, all right, find out what are the key levels, what prior highs, prior lows, okay, again, all come into place. You can see here the prior highs, prior lows. Again, everybody is familiar with. So nothing new to what everybody, you know, again, we're tops down traders as well. We want to know where we are on the larger roadmap. Okay, so we'll just zip through that. The next chart that we do look at in relation to that, and again, we call this our balance chart, and essentially it's a 5-day, it's a 5-minute chart rather, and again, kind of very similar format. We have a 5-day profile to the far right. We have the intraday. This is RTH session only, and with the profile there. And again, we have various levels. Again, this green outline box that you see here shaded, that is the current value, developing value area. All right, value area high, labeled value area low. All right, and then the point of control for the center there. So again, all easy, accessible charts to and displays and levels to know where we are. All right, and that's, again, that's obviously very important for all of us. All right, we don't want to be, you know, if we're down near, you know, as prices have rotated down here today in the auction, if prices are down there a 5-day low or a key area, right? It's, you know, again, I don't want to be establishing a short position down in that particular area. I'd rather let the market show us that it wants to violate and even trade lower. Then we'll be looking for a potential trade for a continuation. But once price reaches certain key decision point zones, as we refer to them as, you know, again, we're looking for potential reversals. So right here, coming off this value low, all right, around the 60s. Again, we had a 65 as a target, and we had this is a 50-day, 50 bar low right here around the 58. So again, fairly significant price point with the current value low. So we're expecting some sort of bounce back up into the range here. Again, this is our CCI indicator. All right, down below. Again, just kind of giving us a reference of extreme or overbought conditions there. All right, and then we're going to kind of get into the next chart here. All right, which is we refer to this as our Eau de Loop. Now, Eau de Loop, OODA, loop, stands for observation, orientation, decision, action. So one of our missions, as I stated earlier, was we're looking for to make better decisions. Okay, it's very important that we make better decisions. So part of making better decisions all right, is to have a technique, all right, to keep us focused where we need to in terms of kind of a step-by-step process, all right, instead of just, it's very easy for traders to kind of be thinking of so many different things at the same time that we don't keep ourselves grounded in any way. And so using this technique called the Eau de Loop, right, is again stands for observation, orientation, decision, action. All right, what we've done, and again, by the way, that this Eau de Loop decision matrix, as we refer to it as, this is an adaptation from a fighter pilot back in the Korean War days, Colonel John Boyd. And again, if you Google him, Colonel John Boyd, Eau de Loop, okay, he was the originator of it. I've taken his work, his original work, and adapted it to trading, okay, using the same concept of observation. So we want to observe what the market action is doing. And again, there are a variety of questions in relation to each of these segments, right? During the observation process, all right, again, we have a whole workshop, educational workshop on this in our membership material. But there's a number of various questions that we want to seek to answer during that observation process. So just watching the market, you can just watch it, but are you observing it in a efficient manner, right? In a quality manner? So we try to teach our members, give them ideas and techniques to help in the observation process. Once we observe what the market is doing, we want to orientate to it. Should we be looking on the long side? What's the current lean? Long side, short side, etc. So once we have that in mind, all right, remember, we're not looking to counter trend trade. We're looking to stay in alignment with the dominant force of the day. And that can shift very abruptly, as we saw today. But in most cases, it can be fairly established. And then, we want to stay in alignment with that. Once we have the proper orientation and we continue our observation process, we want to then look for trade opportunities, right, of those categories that I stated earlier, right? Stackers, ATRs, momentum, etc. So how we do that, and then once we drill down into the decision process of identifying a setup that the software generates, by the way, for us, okay, based upon very specific algorithmic criteria, then we want to ultimately, where the rubber meets the road, is to make the decision. So if you can kind of visualize this tops down all the way down to, where we make our final decision. The tools that we have here that we've formulated over the years is what we call our Eau de Loop matrix grid. And this is a 3-minute chart, okay? And we have a momentum indicator here. So we get simply a 3-minute chart at the top. And again, some levels, right? So everybody should be somewhat familiar with this. The initial balance high, which is the first hourly high, midpoint, and low. So that's a key reference point for us. The value area high or low, we've already spoken about that. So that's on our chart here. And of course, the volume weighted average price is also on our 3-minute chart up above. So these are some key levels that we want to certainly be aware of throughout the course of the session. Of course, the profile. All right. We also have on here, we have a color background change. All right. The background color change here from green to this, pinkish redded color. And what that signifies is a change in the momentum and price. Okay. So again, when obviously when it's in green territory over here, okay, we want to be leaning to looking for longs only. Right. Again, we're trying to stay in alignment with the dominant momentum, dominant force, as we refer to it as. So at this point, when it's green, and the key area is what we're looking to do here is where it's shifting from bearish to bullish momentum and vice versa. Okay, and again, in most normal cases, there is a transition period, not like today where there was some news, but rather there's typically a transition period here all right, that we look for. So you can see in the far left here, we were in this bearish kind of condition, all right, and then there was a shift, okay, and then the background color shifted to green. What that means is if you're currently short, you better look to cover those shorts square up. If you're not short and you don't have a position, we're actually looking to take longs. Okay, and again, the technique of how we take longs, what we look for, etc. Again, it's all outlined in our educational material. But that's in the basics of it. When we have a color background change, right? By the way, this is not a red light, green light, type of method by any stretch. But what it does do, the background color, it gives us a visual cue to what side should we be focusing on, and rather than just a black background or a grayish background that a lot of people use. Again, I want to be prompted. All right, what is the momentum doing? All right, are we on the bullish side of things? Are we on the bearish side of things? And again, once the key areas that we're looking for is when it's shifting from bearish to bullish. That provides us the greatest point of opportunity. Once it's been, once it's been in existence, okay, again, we still want to maintain that bias, if you will, right, or that lean with the momentum. But then we become a little bit more selective in the type trade setups that we look for. So let's just go on a little bit more about what this chart's about. All right, and again, this is pretty straightforward here, guys. I'm not going to, going to kind of clue you in. This is your normal MACD, right? Moving average convergence divergence indicator. We use that as a core of our shift in momentum. And along with that, it's a Bollinger Band. Okay, so the MACD Bollinger, pretty familiar. It's pretty standard on most trade systems. Okay, I know of a number of different algorithms, all right, that I've learned over the years, having worked for the investment banks and so forth. I'm going to tell you, dimes to donuts, when there is a momentum shift, okay, and again, a momentum shift here is identified as the MACD crossing above or below the zero line. Okay, and there's a number of algorithms that actually will click off, okay, based upon that signal alone. All right, and again, there's numerous algorithms out there doing their things, but this is one that I am familiar with a number of shops that do use, and knowing that can help provide perhaps a little bit of confidence in when we are observing a shift in momentum, price momentum, all right, that we also then have in the back of our heads that there are some professional outfits out there that are looking at that as well and acting on it, not just looking at it, but acting on it. The next graph below, okay, it's a little scaled differently here, but is a cumulative delta, okay? So you can see here on the cumulative delta, at the time of the shift in momentum, okay, let me put a vertical line there. All right, so the shift in momentum there, you can see, all right, not only the color background, but now you have support, all right, you have supportive volume delta coming into it. That's very important, by the way, all right? So again, and again, these algorithms that I spoke of, all right, if there's a certain threshold of volume delta that's associated with a momentum shift, the tendency is to perhaps get more aggressive as well. So again, knowing this type of stuff can help us, and this is why we use this. This is one of our primary identifiers. All right, and again, we're always looking for the delta readings, right, in volume. Now, again, there's ways, on the far right there, you can look at individual, number deltas. Right, everybody's somewhat familiar with that. I'm very much interested in a cumulative delta. All right, that tells me what's happening over a period of time, not just an individual price point. Okay, so, and again, you can see the background color change on that particular um, window as well. So you'll have the individual delta bars and you'll have the background color change. So again, having that green background, now that's different than the green background above, but it's supportive of the same idea. Okay. And then the last piece of the pie here, which is the important kind of summary of everything, is we have a bias grid of 7 different biases. Okay. And again, we have an entire workshop that goes into explaining these. But in essence, what we're looking for is the first 3 biases are contained in the momentum and the delta readings. Okay, and again, each block here is representative of 3 minutes. All right, each cell, each block. So vertically here we go from the most sensitive biases 1, 2, and 3. These are the most sensitive to the less sensitive, and again, these are multi-time frame biases. So a lot of times what we're looking for is we're looking for what's called a sea of green or a sea of red, where everything is aligning up. The larger time, intermediate to larger time frame to the most micro time frame. And when that happens, the markets usually are very aggressive in terms of price action. But you'll see how this kind of shifts. All right, and again, each horizontal column here, each horizontal is, again, associated with price. But what we're looking for there is we're looking for transitions between,
Just a heads
where
up,
it
Beth
was
Rigby of Sky News just
earlier in
tweeted
the
that she's held an
session,
interview with
again,
UK
as we
Prime
spoke
Minister
over here
Boris Johnson,
early this
questioned
morning
him
where it was
about recent
bearish, right? So
allegations over
bias
Jennifer
4 through
Crewery, also
6
about
were
disagreements within his
bearish,
own family
but
over
biases
policies.
1, 2, and 3
The interview will be broadcast on
were
Sky News
shifting
from
to
5 p.m.
bullish.
London time, so that's in
Okay,
just over 15
we're
minutes.
shifting to bullish. So as this is shifting to bullish, this is giving us a clue that the very short term, all right, is changing character. So again, we talked about the Eau de Loop, right? And this is what we refer to as our Eau de Loop matrix grid. All right, so our observation orientation, or essentially the grid here, the bias grid, is doing the observation for us. All right, in the orientation for us. Our job here at PTG, as traders using these techniques, all right, is to understand what we're looking for. Let the software begin to do the work for us actively. It never sleeps, constantly running, and we're looking for changes. And our goal is to be able to read the changes as they're unfolding in real time. Now, since these are 3-minute blocks, there is time for us to evaluate. All right, everything isn't immediate, but we're looking for the changes to occur. And as the market begins to evolve, okay, and develop, we start seeing a tendency that the market is either wanting to push higher or potentially lower. Okay, so this is kind of the stuff that we look for. All right, and let me just kind of reset this. But you can see here the delta. Obviously, we had the news out, and so we have we have our down trending condition. So once we know what side of the trade that we want to be looking for, okay, and this, obviously the short side here. So now from this stage, we get into our decision process in terms of where we hit to our execution chart and the order flow. So this is where the rubber meets the road. So we've done all that tops down earlier in the morning, observation, drill down to our Eau de Loop. So right here, right on our Eau de Loop grid, we can see biases 4 through 7 are all red. So what does that mean for us? We're not looking for longs, right, at all. structural longs. All right. We're not looking to scalp. We're directional traders, and we're looking to stay in alignment with the primary direction. And then once that direction has shifted earlier, as it did, all bets were off on the long side, and they should be off if anybody was long, exit those longs and try to realign to the short. How we realign to the short, that becomes the interesting part. So what we're looking for here, okay, is now this was an aggressive move, of course. Oh, and by the way, this is a 750 tick chart. So what we have done, all right, to even make the visualization more useful for our traders is, and this is by using Sierra Chart, which is our primary trading platform we like to use, charting platform, because Sierra Chart really does a great job, by the way, in being able to has its internal tools that we can take the background color over here on the 3-minute chart, okay, that was explained a few minutes ago. We can overlay it on any other chart. So we've basically overlaid the 3-minute momentum shift onto the 750 execution chart that we use. So by seeing this, I mean, it should be able to bop you right in the head that the momentum has shifted from bullish earlier to bearish. Okay, so that's one of the, again, part of this observation orientation. So once we're able to see this in developing, right, all bets are off, and we want to shift to, in this case, the short side. All right. Now, again, when the market moves as briskly as it did here, there may not be an easy way to get on a move like that. But traditionally, all right, and what we typically will look for is some sort of a pullback in price after the market has made its, initial thrust move. We're looking for a pullback of sorts, and looking to get on, so a temporary. So everybody's familiar with that, right? So initial pull down, and then some sort of retracement bounce in this case, all right? And we're looking to get on, so so we can get the next wave. Shouldn't be new to anybody. This is not novel. This is not unique to us. But the issue always becomes how to get on, at what price point to get on, right? Again, in an efficient manner. So this is where we use our CCI crossover system, all right, to help us out. Now, additionally, and again, you can use order flow as well. But additionally, what you're seeing here is on the next segment here, just below, all right, is a representation of the MACD. All right, so this little red histogram here is our MACD. The next, and since that's red, we know we're on a momentum sell signal with the MACD. The next histogram is the bid-ask volume ratio. All right, now again, Sierra Chart does a wonderful job with this. What the bid-ask volume ratio is, and I refer to it as our pressure gauge.
The Irish Foreign Minister says there are serious and significant gaps between the UK and the EU.
If it's red, that means the majority of transactions that are occurring are on the bid side.
Gaps between the UK
and the EU. So it's sellers hitting the bid. Okay, and so we see, you can clearly see here the pressure, or the majority of trades are occurring on average, all right, on the bid side. Okay, so we should be undoubtedly clear that the sellers are the aggressor. You can also see that, of course, on our order flow. All right, and again, you can look at the imbalances in the order flow, all right, on the Delta order flow as well.
The Irish Foreign Minister says some
people
from the UK are falling well
numbers oriented. Some people are graphically, they like the graphics. So the graphics here, all right, again, we want to know where is the pressure being applied. So if we know that the pressure is being applied to the bid side, and we know we don't want to purchase long, all right, very simple. We're looking for bounces, all right, and we're looking for opportunities to get in. So here's an example, right, where price is pushed down, and then you can see the bounce back up. Now
The Italian new car
If I bring this
registrations year on year for
back in here
September.
for a
Car
moment,
read minus
this is our
3.11%.
Scandalizer.
We also get New
Okay.
Zealand QV house
Couple
prices
of the
year on year for
categories of
September.
trade setups
A
that we
prior
look
read
for are
of
the
2.3%.
ATR, stands for
And
average
anyone
true
following the
range,
emerging markets, namely South
and
Africa,
the
the
Bull or
South
the Bear
African Reserve
stackers,
Bank are
as
due to
well
release their
as
biannual monetary policy
the
review.
CCI crossover. We refer to them
Also
as
learned in the
premium or
last few
discounts.
minutes, Sky News
Okay.
will be running an
So on
interview with
here,
UK Prime
the
Minister Boris
Scandalize the
Johnson
dashboard will
from the
give
top of the
you the
hour.
direction. It will give you the signals. It will give you an audible and, of course, visual alert
New lows for the oil
to what
markets as well.
signal is
US crude futures
firing
down
at
spot
a specific
9%.
time. So on the S&P here, all right, we can see that we want to be looking for shorts, so we know what side of the trade that we want. We're just waiting for now, right? So we have our observation orientation already pre-established in our decision matrix. All right, now where the rubber meets the road is the DA part of it, right? The decision action cycle. So what we're looking for there is we're waiting for prices to give us some sort of, back test of sorts, all right, to give us a better opportunity to enter, right, on a pullback of some sort. Now, again, we never know if the market's going to continue or not, but generally when you have some pretty strong momentum, we're still looking, I don't want to go chase price to the downside or to the upside. So we're waiting for that bounce or retracement. So on the retracement here, we got a couple things. We have signals right there where the arrows are and text that tells us this is a premium condition. And again, a premium is defined as in a downtrending condition, a premium is defined as a short sell opportunity, right, to establish a short position. All right. And so along with that, you also see that we have these ATR lines. All right. So these are and they're labeled as ATR bear.
According to Charles
All right. So these are
Gasparino of Fox
bearish
News,
average
all
true
three
lines.
GOP members
Okay.
of the FCC
So
have now voted in favour of the
the
Sprint
combination of
T-Mobile
the
merger.
two offers us an opportunity to get in on a trade, all right, and it gives us the signal, and it gives us a price point, a suggested price point from which to enter. In this case, it would be around the 68s or so. Okay. So all this is generated automatically for us. This is what we look for. This is one of the core setups that we have in the method. And again, from that point on, it's just a matter of individually managing the trade. We have suggested ways of managing the trade. We also have an auto trader. It's called the ATA, Auto Trade Assistant. And if we enable that, it will execute various trades for us automatically if you're having trouble taking the trade. Our auto trader system, by the way, is not really designed as a black box. All right. And I get that question all the time. Can I just turn it on and let it run? And the answer is I wouldn't suggest that. All right. But the idea simply is if once we know that we want to be on a particular trade side, we want to let the computer generate the signals for us, right? Which as you can see here, it has. And then that becomes we're the way I'm a hybrid trader, right? Meaning that I'm a discretionary trader with computer assistance. All right. I want to make the decisions. I want the computer to notify me when there's an opportunity. All right. I'm looking for a short sell. Fine. Notify me when there's an opportunity, all right, based upon certain specific criteria that we've coded, all right, for us in the algorithm for the auto trade or the CCI crossover system. So once that generates the signal for us, that's where the rubber meets the road, folks. Do you take the trade or not? Right? And this is where everyone, I don't care who it is, how much experience you have, this is where our challenge comes because we don't know whether the trade's going to work out or not, do we? All what we know is it meets the criteria. And if it's a robust enough method and system and that it's been back tested, right, and forward tested over a large series of data over years, which this one has, it, you know, again, it still doesn't guarantee a successful trade, but at least I know all the components, all the criteria for a successful trade that we've observed historically are there, are in place. But at the end of the day, right, this all this stuff can look great. The best systems, you can look back statistically and see, you know, the performance history, and that's great. But ultimately, at the end of the day, it's where the confidence comes in to take that trade at the time. And that's what I refer to as where the rubber meets the road. That's where most people have the biggest problems. They don't take the trade when they should be taking the trade because whether it's fear of loss, fear of the unknown, again, all those psychological components that we all deal with. But again, what we want to try to do and what we've done here with our method and the software, etc., is try to eliminate all the potential, um, you know, unknowns or uncertainties, all right, as possible. All right. Get me to the point, you know, what do they say? Get me to the church on time or whatever, you know, and you still got to say, I do, right? So, you know, you're at the altar. Now, do you say I do or I don't? All right. That's again, the rubber meets the road. So, the computer will give us, you know, that assistance. It will generate the signals for us. And as long as we've done all the preparation, you know, the Eau de Loop, the bias grid, you know, what side of the trade we should be looking for, all that decision matrix. And by the way, it's called a loop, right? Eau de Loop, because if you think about a wheel that's turning, right, it's constantly changing in our heads. Okay, again, we're constantly observing, constantly, you know, orientating to the market's uh, points. Okay, then the decision and action cycle, and then finally, you know, again, it kind of as a final um, decision, you know, criteria, if you will. Some people gravitate quite a bit to the order flow. So when it comes time to finally make that decision, okay, the charts have given us all the signals and everything is there from the algorithm. One of the final factors a lot of people put in, and sometimes I do still think this is somewhat subjective, is they look at the order flow here to the far right, which is the most granular point, all right, the point of sale, the last point of trade. And, you know, if they've been observing that along with the price structure action, you know, they may decide, you know, again, you get like a little bounce here in price. That may be a decision point, you know, to take a short. And that may be in proper alignment with the signal that you're seeing, you know, just to the left, all right, on the price chart itself, on the tick chart or Renko chart, whichever the signal that's being generated. So a lot of times we're looking for buyer sell imbalances in order flow, and that typically, you know, will be right there to the far right. And then at that point, it's just a matter of, you know, clicking the buy or sell button and using proper position sizing, risk management, okay, to establish a position. In terms of establishing positions at the end here, I like to what I refer to as probe. Okay, I am not an all-in, all-out trader. So if I can trade, you know, 4 contracts, whatever it may be, I'll put on 25%, right? So I'll put on 1 contract, right? There's no shame in 1 contract, by the way, you know, and then many folks are using the micros these days as well, right, to help reduce, you know, risk. Put on a portion of the trade. I always suggest this to our members. Have your toe in the water, right? Test what the, you know, the current is.
Mr. Johnson
right?
says
What the
chances of a
temperature of the
deal are
water
good,
is.
but it depends on both sides really working
You know,
together
and
to
if it's
get this
good
done.
and it's working,
Johnson says he does
then
not
add
think
to the
that our
position.
friends, the European
All right,
Union, really
keep
want us
adding
to
until
stay
it's
beyond the end
you've
of
either
October.
established your your final
Johnson
full
declines to go
position,
into any detail on his
and it's
proposal. He'll
working
make
for
to
you.
the
So long
European Union
as it's working for
due
you,
this week.
right? If you establish an initial probe and it's not working
Johnson
for you,
says
it's
the
going
UK
against
is
you.
very,
Well,
very
there's no
prepared
reason
to
to
be
add any
flexible to solve
more
the problem
risk
of customs
to a
checks on
position
the
that's
island
not really
of
working in
Ireland.
your favor. All right. So that's kind of the overall methodology, step by step, right down into what we look for. And again, these signals that you see on the screen here are generated
New Zealand data,
automatically.
house
You'll
prices
see
year on year
here
for September, 2.4% against
one of the
prior
categories here is
2.3%.
our stackers. All right, bull and a bear stacker. So this would be a signal here at around the 68, 67, 75s. That the market is generating
the South
a
African
signal
Reserve Bank
for us.
also out with
All
their
right.
monetary
Again, it's
policy
not an
review.
automatic trade, but it's part of that Eau de
Says
Loop
consumer
process.
inflation to remain
Okay,
within
it's
target
giving
range
me a
until
bear
2021.
stacker signal. What does that mean? Should I be doing something? If so, what could I be doing? All right. And again, in this case, a bear stock obviously would be a short sell. All right. So you would look for an opportunity to take some sort of position in alignment with the current signal. And again, from that point on, it becomes a matter of managing, you know, the trade. All right. So these signals are there for auto-generated, all right, specific algorithmic criteria. And again, it's all designed to keep us in alignment with the dominant force. No counter trend trading in our method at all. Don't even talk about it. All right. We're looking to stay in alignment with the dominant force, increases our opportunity and our edge. Okay. Okay. I think my slot time is complete, if I'm not mistaken. If anybody has any questions, I don't know if there's time for questions, but again, feel free to, you know, everybody has access to the trading room all week. And we start at 9 o'clock, 9:15 for our opening range. And again, we go through the entire week. Okay. And if you have any additional questions, you can email me, david@playerstradinggroup.com, or reach out to me throughout the course of the symposium this week. Okay, I will formally end the presentation there and get to any minor questions anybody has. Okay.